Hello and good day. This is the daily analysis. We're looking at the S&P 500 index on December 29th, 2025. The S&P 500 index has been on a bullish run. Liquidity moved to the buy side, collected its all-time high, and on the last trading day, which was Friday, managed to stabilize the price. It didn't go above its all-time high and only closed with a doji candle. With the start of Monday, the price faced selling pressure, which formed a bearish candle here. By analyzing the correlated index, which is the NASDAQ, we see two assets showing SMT divergence. And the S&P 500 index made higher highs compared to the previous two swings. They formed their own highs, but in the NASDAQ index, it failed to reach its previous swing high and is still far from its all-time high. In this, we can consider this as a bearish trend and the possibility of the market turning bearish in both the S&P 500 and NASDAQ indices. One of the reasons for this could be the uncertainty in the technology stock market. At the end of this year, liquidity has left the market, and at the start of the new year, prices will be reevaluated for stocks and the S&P indices. This will be done for the S&P 500 and NASDAQ, which we need to. Update. However, it is predicted that prices will enter a bearish phase and react to this daily FEG zone in this section, then continue its bullish trend. If it is accompanied by selling pressure, it can reach the daily FEG zone. It may react to the daily FEG in this section, or this order block candle, and after that, we will monitor the trend. If it is accompanied by buying pressure, it can react to this FVG area in this part. It could form a higher high here, and after that, it may enter a bearish phase in the 4-hour time frame as well. The S&P 500 index, compared to the NASDAQ, has formed a bullish divergence at the bottom. Here, a higher low has formed, and in this chart, a lower low has been created, which indicates a bullish correction in the market. By examining, we can also see on the RSI indicator that the RSI has entered the 90 zone, which indicates buying pressure in the market. And after this bearish correction, it could react to this Fibonacci zone here and start a bullish trend here in the 1-hour time frame as well. We can see that. The S&P 500 index has entered an order block zone. It has formed a 30-minute block here and has shown a reaction, which we can see in the RSI section. It has entered a high potential selling pressure zone, which could be accompanied by a bullish correction here, as it has reacted to this FVG zone and could move downward. It might not hold the support level. It could consolidate here and then continue its move toward higher highs. By analyzing this 30-minute time frame, we can also identify a buy trading opportunity here, which is my prediction. The price will make a correction. It will register here and move downward. If it stabilizes within the order block zone, it can set up a trade opportunity for us, targeting higher levels. If the price moves downward, it will collect liquidity around this area. Should it break or swing in this part, and with a close within this order block, we can use this opportunity to enter a buy position. The entry point is in this area. The stop loss goes behind the order block in this section, and depending on the setup, either a 1-to-2 risk-reward ratio or the swings. Set your target at the higher levels and liquidity zones above. This can give you a maximum risk-reward ratio of 5.5. Wishing you success and profitable trades.